Now, a record-breaking hurricane season officially finished in the United States yesterday. For the first time ever, 3 Category 4 storms hit the U.S. shores. That includes Hurricane Harvey, the first major hurricane to slam the country since 2005. It was also the costliest season yet, with about $203 billion of damage. Joining us now to talk about her business's part in that story, and other things, of course, Inga Beale, the CEO of Lloyd's. Very good morning to you, Inga. So you've already said that Lloyd's, the market, Lloyd's market paid out $1.7 billion to date for Harvey, for Irma, for Maria. How does this hurricane season rank against previous, and what have you learnt from it?
We think this could be one of the costliest years on record, actually. Obviously, we're still having to count the cost. And when you see still some of the tragic scenes of people trying to put their lives back together, you can see how difficult it is to actually make an assessment of what the final damage will be. But it is going to be one of the costliest years on record. And I think what it does for us is certainly focus our mind again on climate change and the impact that that's having, particularly on rising sea levels, and then the impact that has when there are these disasters.
The human side of this story is obviously something that we focus on, as well as the market side, and it's trying to get the balance right sometimes. You talk about the new concentration, climate change, and other dynamics. What does that do for new product development? Do you begin? I know there's catastrophe insurance, I know there's a whole form of variety of products, but what does this mean in terms of looking at the future and looking at what it is that you deliver?
Yeah, well, it's very interesting because one of our major competitors seems to be governments. It's quite interesting when we look at this, because if you look at the history of some of the major losses in the US over many, many decades, 50 years ago, insurers were paying much more of each catastrophe loss than they are now. And each decade, the government has been taking on more of the risk. And that's a challenge for us. Now, of course, governments don't want to see any of their voters left stranded, so they'll be, you know, forking into taxpayers' money and footing bills to get people's lives back together. But if you look, sort of 50 years ago, insurers were paying 80% of the bill of these losses. Now, it's about 20%. It's completely reversed. And one of our challenges as the insurance sector, and as a, very important part of supporting, human progress and the way, the world has to move on, is more and more governments tend to be sort of wanting to step in to look after their own citizens. And that's one of our challenges. It's happening in mature markets, and it's predominant in some of the early emerging markets where insurance isn't very well known and they don't really buy much insurance.
That's interesting. And I wanted to ask you about other types of insurance that you're talking about, innovation in the insurance sector, that maybe that takes us on to. A lot talked about, and you've been talking about artificial intelligence, you've been talking about driverless cars and all these sort of at the frontier of technology at the moment, and the insurance industry's role in some of that. What headwinds do you see in terms of insuring risks around driverless cars? I was reading some pieces yesterday about, the dangers if your car was hacked, if your brakes are remotely applied, and all these new challenges, I suppose, that are thrown up for your industry.
Yeah. Well, Lloyd's has always been at the forefront of doing the new risks, and cyber attacks is really one of the big risks that we face as the world, really, when we think about technology and digitalisation of everything that's going on around us. Lloyd's actually writes about 1/3 of the cyber insurance market globally. I mean, it's rapidly growing. But all of these new technologies provide new business threats and risks. And it will change the face of some insurance. So if we go to driverless cars, and I'm a keen proponent of it, if we look at the accidents on the road, they're mainly caused by human error. So if we can use machines to eliminate the human errors, I think we're all going to live in a much safer world. But then you run the risk of things being attacked by malicious hackers and things like that. But our challenge is then to work with some of the car manufacturers to think, well, how can we redesign the insurance product? Because fundamentally, people may not need to buy motor insurance as they have done for decades.
We reported quite heavily this year on a number of cyber attacks, that malware attacks around the world. Did you see a significant uplift and consequently pricing in terms of cyber security products for yourself? What changed this year as the malware attacks went mainstream?
It is we sort of see opportunity as soon as there is another big attack, because it does raise the awareness, and particularly boardrooms. In the boardroom, the directors are there saying, what about us? And couple of years ago, it was basically only businesses in the US that bought cyber insurance.
Okay.
Everyone else in the world seemed to think they were immune. I think some of these attacks are showing that nobody is immune from a cyber attack. And we're seeing now increased demand across Europe. We're seeing it in parts of Asia. The rest of the world is sort of waking up to this threat. But for us as an insurance sector, we don't have years and years and years of data to even understand if we're getting the pricing right. But from a Lloyd's perspective, underwriters, brokers work together to think about all the types of scenarios, how much they would cost, and we do our best at guessing what we should charge.
And what is the scale of the market then for the cyber attack insurance market? How big is it versus natural disasters now? And that gives us some idea of the sort of the growth potential. And as you say, still very much focused in the US, even if it is now, growing elsewhere.
Yeah. So revenues for cyber insurance only are estimated to be about $3 to $3.5 billion, which is nothing compared with other perils. But it's just starting on the journey, and it is going to have it's going to increase dramatically, particularly in Europe, because we're going to be having the new data regulation coming in next year, GDPR. That is, again, going to focus every board's mind on data and how they need to protect it, because the fines that are going to be able to be put on companies if there are breaches and they don't behave responsibly towards customers, these are going to be big numbers.
And here's me talking about cyber attack as if it's all one, if it's just one product. But I'm guessing as this becomes more developed, it's sort of fragmenting. I mean, you mentioned how people might not need insurance when they're driving their cars in the same way if we get self-driving cars, but they might need some sort of cyber protection, I suppose. So cyber protection then starts to break down into all the other sort of subcategories, I guess.
It does, and indeed you can buy as an individual protection. We call it sort of identity theft. So someone's got in and hacked you as an individual, and there are many types of products.
But let's talk about that in terms of the development. We're talking a lot about the US. You've mentioned the US on a number of occasions, and I just want to take it back to the business slightly, which is we've got a tax deal set to go through. Everybody assumes America's roaring, 3% growth and growing. North America is more than 50% of your business. 40% of it comes from the United States of America. You must be absolutely in joyous form. Good growth, corporates are up. How much are you yielding from the United States of America? How much more build will you get from that area?
Well, we have seen growth in the last few years, actually, in the US for Lloyd's. We play again in that very specialty area, so not the mainstream insurance risks. We take on all the catastrophe exposures and anything specialty. We've seen 8% growth in the last couple of years, year on year. We anticipate perhaps that coming through in the future. It's certainly going to be a big focus for all of our underwriters and brokers. We're going to be looking for growth. And it will continue to be one of the countries that comes up with the new risks. I mean, they're investing in the future. So we want to be alongside them.